Alright everyone, so in today's video we're going to be talking about the biggest day in markets of the year so far, the most important news we've had as far as economic data goes, and talking about these numbers so we can figure out, is the market now bearish, bullish, do we not know yet, as well as rehashing stuff I was talking about on my stream today. So if you were unaware, I did do a live stream during the FOMC meeting. So if you want to get my full take on the economic data and price action, make sure to go check out that stream on the live section of this YouTube channel. But let's go ahead and quickly break down everything that went on today. So as you can see here, Bitcoin launched up into this previous range we were in before rejecting this level, doing a full rotation back down. This is classic FOMC price action, swinging up before swinging down, before potentially swinging back up again, right? This price action was essentially generated to grab liquidity and was really just a play for market makers. If we take this deviation out of the equation, you can see price really just ended up where we were at the start of the day before that data came out. And what was the data? What did we receive today? Was Jerome hawkish or dovish? Was CPI hot or cold? And let's jump into that right now. So we go over here to the economic calendar and you can see core CPI month over month was actually down, along with CPI were both down 0.1% versus what they forecasted, so 0.2% versus a 0% raise in inflation month over month, which is very bullish for markets and great for the economy. We don't want to see inflation just keep going up. What that tells us is that the Fed is more lenient to give us a rate cut, and you might think rate cuts are actually bullish. In my opinion, they are bullish when you lead up to it, but as most things go in the markets, they are sell the news events. Whenever you do actually get the cut, usually marks tops in markets. So we need to be watching out for when that cut is to actually happen. But now that inflation is going down, they're more likely to cut sooner rather than later. But what is actually nice is that Jerome did not come on and immediately just go, well, we're definitely cutting rates because unemployment's bad and we need to support the economy, because that's why they're cutting rates, to stimulate the economy. And if they don't need to stimulate the economy, that means that the economy is working as it should be, which gives us clear skies and continuation for the bull run up until that cut actually does take place. And when we look at the CME Group's Fed rate cut predictions, we can see that it is still 91% chance that they are not going to cut in July, which is really nice because it means the likelihood of a top coming in, earlier this summer is much less likely. I was thinking for a second we might actually see that top sooner rather than later, but I think it's still going to be September and possibly even November, just based on what Jerome Powell said in his speech today. So we go over to September's predictions. You can see it is more likely to have that rate cut in September, and I do think this is very likely, so we want to be watching out for that, right? September's historically a very bearish month in markets, so I would not be surprised if we actually do get that cut in September, and the latter half of that month is cascading liquidations to the downside. So we'll be watching that closely. But if we go over to November, we can see it is actually still more likely that we do have the same cut in November. So they're really kind of stuck in between, hey, are we going to start these cuts in September or November? CME has not quite decided yet, even though it is more likely, it is looking like that September is going to be where we need to be looking out for a high in our assets. And what does that mean for us? Well, it means we still have plenty of time to finish our parabola to the upside and to have our big altcoin season. It doesn't take long for these violent rallies to happen. As I discussed in my last video, it could happen as fast as 2 weeks. More realistically, we're probably going to see the altcoin season last around 1 to 2 months. So all in all, this news gives us plenty of time to reaccumulate before the final just blow off top does in fact happen. For all of our assets, more specifically the S&P, if we go over here to this chart here, we can see we do have a futures gap that we did make before the meeting. So to go ahead and fill some of that made a lot of sense, but we actually got back above very quickly. I thought we were going to fill more of this, but we're already back above, kind of swing filling this level. So we could have already seen the low on S&P as well as Bitcoin, and we'll talk about that in a second. But do not be surprised if we roll over one more time. Today is still not the day to be taking leverage positions. The only place for that would have been yesterday at the failed auction. But if we do go over here to our futures market, we'll just pull up Blackpool here. That's what I like to use. You can see very clean bounce out of the lows there. If we jump into like a 5-minute time frame, you can see this was FOMC volatility, right? We're swinging to the upside, swinging to the downside, and then we went ahead, swept all of our liquidity, and now we are heading back up, and we want to see this not roll over and just become a golden pocket backtest. And so far so good, but this is completely an unknown because we have not had any confirmation of getting back above that. So because this is technically somewhat of a good high, we did grab liquidity from our previous levels. We want to be watching the S&P closely to make sure we can go up into all-time highs. And if we do sweep this one more time, that's again nothing to worry about because we are filling the futures gap, so that's kind of to be expected if we do roll over here. So not too much to speak of on the S&P. I don't think, we're at a very critical level on this thing. We have clearly shot up into all-time highs with the cold CPI we got today. It launched us kind of into outer space on this thing, so we have plenty of room now to go ahead and wash around if we want to backtest all-time highs or just continue the parabola to the upside. I wouldn't be too worried what happens here. The S&P still gives us reason to be extremely bullish on Bitcoin. And let's talk about Bitcoin today. We did see a similar thing here with a nice pump on that CPI news when it did come in cold, then dumping after the FOMC meeting when Jerome Powell didn't come out as the most dovish person in the world, which was to be expected. We don't really want him to do that, because if he's coming out super dovish, that actually means, hey, maybe there's something wrong with the economy and he's wanting to cut to stimulate it. So I do expect this to continue to the upside, similar to the last time we had an FOMC meeting. You can see if we go to our range low down here when we had that deviation actually outside of the range. Let me turn off my volume profiles here. This was our last FOMC meeting. You can see a very similar price action where we dumped down into this range, pumped up, and then dumped back down. This was during the FOMC meeting, right within these two candles here. And then afterwards, the market decided it wanted to trend up, and we went ahead and shot all the way back up into our range. And now I expect a very similar thing. Now that the meeting is over, maybe we chop in here for a second. Maybe we even, sweep these lows, grab some more liquidity before heading up. But at the end of the day, we should be making higher highs within here. And then you're going to have a break of the all-time highs coming very soon, in my opinion, because that is where all the liquidity is sitting. This is something we went over on the stream. Our liquidity is still to the upside, so in my opinion, there's nothing to worry about as long as our lows hold. I really do want to see this low get held here. We had a nice failed auction there, but if we were to come down one more time, that again would not be the end of the world. We just want this to be a sweep structure. If we start closing candles down here, that would worry me, okay? We do not want to see this happen at all, but as long as we are holding this sweep level, right, these previous lows here on our higher time frame candle closes, there's really nothing to be worried about. And all this was just FOMC volatility before we do finally go ahead and break up, squeezing past all-time highs, where we finally do get that massive short squeeze and our altcoin season. And something that tells me we will have that altcoin season is you see Bitcoin dominance is coming down today with this FOMC volatility, which is our sign that, hey, maybe these lower highs is finally going to play out and we are going to finally break this trend that we have had since 2017, turn this into a big deviation, and actually go for the lows, which is where your big altcoin season happens. Because Bitcoin dominance falling means that the markets are bullish and that all that is happening is the altcoins are outperforming Bitcoin. Jumping into trading light now, this is something we were looking at all stream, trying to decipher the order flow and the footprint charts here, and we drew out some sweep levels that we were likely to grab during that FOMC meeting, and afterwards we did in fact go ahead and grab this first one. Made somewhat of a poor low here. This is not a failed auction or anything, and it is at the same level as this previous wick, so could this roll back, grab that on like an hourly bullish divergence or something like that? Certainly could. That's kind of what I expect to happen. I don't really expect this lower level to get grabbed. I think this failed auction back here should hold as our macro low, but don't be surprised if we do roll one more time to make that hourly bullish divergence or something like that. But what I really like to see here is if you look at our upside liquidity, we still have this sweep level here that did not get tapped. If we were truly bearish during FOMC, I feel like you would have gone ahead, swept this, grabbed your single prints before heading down. The fact that we did not see that tells me the market makers are saving this liquidity. They're saving those single prints to get grabbed later, which is why there's no reason for me to get bearish from this dump right here. This is just classic FOMC volatility, and the market is telling us that they saved this liquidity for a reason, because they want to eventually come up and grab this, and I have reason to believe it will not be a swing fail. No, I actually think they're going to grab this and push up for those all-time highs, because again, there's just more liquidity to the upside, and most of it is sitting above that all-time high at $74,000. So yeah, all in all, my sentiment is unchanged. I believe this was just a shakeout before the breakout, just some FOMC volatility before the market continues in the direction it wants to go, which in my opinion is to the upside, to grab that liquidity and start the final wave of the bull market, where we do have our true altcoin season, where we do see expansion into risk on assets for the final phases of the parabola, where you do see max euphoria before the top does in fact finally come in. And that's something we'll be watching closely on this channel, because we do not want to get caught up in that euphoria. And that is going to be all for today's video. Again, if you do want more of my thoughts on the markets in general, go ahead and check out that live stream I did today. And if you have any questions about anything, or just want to join the community for this channel, link to my Discord is in the description down below. And with that being said, thank you all so much for watching, and I'll see you all in the next video.